But it doesn't mean that the warnings were wrong, and it doesn't mean that we won't have a recession. It just means that it has taken longer to unfold.
I've noticed your recent interviews regarding your outlook for 2024. Your perspective seems rather bleak, suggesting that the upcoming year could be even more challenging than 2023, with the possibility of a recession looming or perhaps already underway. Despite some voices promoting the idea of a soft landing and positive assessments like Janet Yellen's assertion that the U.S. economy is thriving, what factors contribute to your persistently pessimistic outlook?
Well, for starters, who has a worse forecasting record than Janet Yellen? So I don't put much weight on what she says. But yeah,
point made.
The recession indicators, the long-term, when I say long-term, I mean the ones that have the best track record of being good predictors as further in advance, have been signaling a recession for a long time. So a lot of economists, and I would include myself, have said, there was going to be a recession in 2023. According to the data, that didn't happen. Maybe we fell into one around November, December. We won't know for another 4 or 5 months. We'll see what happens. But it doesn't mean that the warnings were wrong, and it doesn't mean that we won't have a recession. It just means that it has taken longer to unfold than a lot of people expected. But now those same signs are actually getting worse. I'm sure you've heard, there was some very good analysis from a number of people, Jeff Snyder, Stephanie Pomboy, Sarge, Steve Guilfoyle, New York Stock Exchange, and others, about how that unemployment report, the employment report that came out about a week ago, was completely misread. I mean, that was, the stock market went up, right. Unemployment, job creation exceeded expectations, unemployment remained constant. That was consistent with the happy talk, with the Goldilocks narrative, soft landing narrative, et cetera. And so kind of stocks rallied on that. But if you look behind the numbers, there are two surveys. One of them showed about 220,000 jobs created. The other one showed 1.5 million full-time jobs lost. And then there were about 700,000, a little more part-time jobs created. So if you net the two, you still lost 750,000 full-time jobs. And then, of course, part-time jobs aren't nearly as rewarding as full-time jobs. And then they'll show that, hourly wages went up. Okay, but there were fewer hours worked. That's how employers are managing the costs. Like, I'll pay a little more, but you work 30 hours instead of 40, so you're making less money. So there was, and then they gave a downward revision to the prior months. And for 12 months in a row, 11 out of the 12 months, they've downwardly revised the prior month's number. So why should we have any confidence in the 220? Because that's probably going to get downwardly revised next month. And when you're like 11 out of 12 months, that's not random. There's a certain amount of noise in the data. Everybody understands that. But that's something seriously flawed in the model. You don't get that. It's like, rolling the dice, getting a 6 11 times in a row. It doesn't happen, or it's extremely rare. So there's something wrong with the model. So there's a lot less there than meets the eye.
It's incredibly frustrating, isn't it? We're witnessing a wave of job losses, with numerous companies still on the verge of announcing further cuts. Corporate America is grappling with the need to refinance their debts, a challenge not faced in 4 decades. Additionally, voices like Jim from the World Bank are warning that the global economy is heading towards its worst growth period in 3 decades. Given these circumstances, one can't help but wonder, how does America manage to remain unscathed amidst all this turmoil?
Well, we have so far, but I think our luck has run out, if you want to put it that way. Germany's in recession. They just are. That data is clear, and it's getting worse. Japan is kind of right on the edge. Might be in recession. UK, same thing, right on the edge. The U.S. China, saying China's in recession is probably a stretch. But if in China, if the growth goes from 10% to 7% to 5% to 4%, which it has over the last 10 years, that lost output is equivalent to a recession. China's trying to prop up their economy, so their economy is doing very poorly. When I see things like world trade contracting, it's not with the trade figures. Everyone focuses on surplus or deficit. So you have a trade surplus, your GDP goes up. You have a trade deficit, your GDP goes down. Or did the deficit shrink? that makes GDP a little higher, et cetera. Forget about that. I mean, yeah, okay, it's important data, but if you look at the top line, the exports and the imports, they're both shrinking. So whether the deficit gets a little bigger or a little smaller is less compelling, less important than the fact that both numbers are going down. World trade is shrinking, and that almost never happens except in recessions or during the Great Depression.